word is getting out that Powell ain't coming back. Brainard is going to be your new Fed chair. Holy smokes. She is full modern monetary theory. Things are going to get really, really, really interesting for gold.
This week's specials with Miles Franklin Precious Metal Investments. 100 ounce and kilo silver bars for only $2.69 over spot, and 1 ounce gold bars from the Rand Refinery for only $65 over spot. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237. Hey everyone, this is Elijah K. Johnson with Liberty in Finance, and back with us today is our good friend Craig Hemke from TF Metals Report. Craig, thank you so much for joining us today.
Elijah, great to see you. Great timing here on Veterans Day, Armistice Day. A lot to talk about.
Definitely, a lot to talk about. We got the CPI out yesterday, 6.2%. So even the official numbers are showing that inflation is the highest we've seen in 30 years. Your perspective on this and how precious metals really reacted to that?
Well, I think more people are figuring out that it's not transitory. That's the first thing. And that's what you're finally starting to see get priced into gold. The CPI at 6.2% annualized. Just the month over month annualized is at 12. And it's probably not coming down anytime soon because the day before, back on Tuesday, we had the producer price index, and that's annualizing at 9. So this is not transitory. And Elijah, this is something you and I have talked about now for the last year and a half. Coming out of the initial COVID lockdowns and the initial QE plans and all of the cash that's been created, not only by the Fed, but the ECB, the Bank of England, the Bank of Japan. We were going to have this kind of double-headed monster of stagflation. And the third quarter GDP that we just got a report on was actually 0.5% or something, barely any growth. And excuse me as I itch my nose. And on a real basis, adjusted for inflation now that's even higher, it's negative. So we are getting into the stagflation, which is, again, pretty easy to predict because we knew of the inflation component would eventually come with all of this, just record-breaking fiat creation. But also the stag part was inevitable too, because, when you go shut down really the entire global economy, we'll just speak about the US though, and people start working remotely, you just don't go back to where you were in 2019 as you come out of this. I mean, businesses adjust, businesses figure out, well, we don't need all these employees, or we certainly don't need all this office space. We're getting along just fine with half the office space. Why do we want to renew our lease for 10,000 square feet when we only need 5? So all kinds of things like that are really still hanging out there. So it's pretty easy to predict stagflation. It was pretty easy to connect the dots to the 1970s. Pretty easy if you know your history to know that the Fed's response in the past to this type of thing to try to get debt to GDP down is to try to inflate away the debt through negative real interest rates. And now here we are. The only piece of the puzzle was that, for the first 10 months of the year, gold didn't respond to that because it seemed like everybody that was buying the futures contracts bought this transitory thing, hook, line, and sinker. But now suddenly, I think people are starting to catch on.
And you mentioned how, this is something that you've been predicting for a while, stagflation. Do you think it's going to get as bad as the 70s? Because, back then we did see double-digit inflation. Right now, officially, inflation is only 6.2%.
Yeah, depends. We don't measure it the same way as we did in the 70s. If we measured it the way we did in the 70s, we'd be right there. So probably not. Within that producer price index that was annualizing at 9%, they tried to say that month over month beef and pork prices fell 10%. Really? I must have missed that because the roast beef I just bought for lunch today was now $13.99 a pound. It used to be $9.99. So I don't know, maybe somehow it went to $15.49 a pound intra-month, and I somehow missed it now falling back. So I don't know if you'll see that level. I'd say what's more significant is that real treasury yield. Okay, the difference between what you're getting in interest as a coupon versus what the inflation rate is. Because everybody remembers, back in the 70s, even before Paul Volcker started to hike rates, and they went to 20%, back in the 70s, we're at 10% on U.S. Treasury. There's no way we could do that now, right? Because we got 30 trillion in debt, 10% would be 3 trillion a year just in interest. So that ain't happening. But at 10% back in the 70s and 15% inflation, you had negative 5% real interest rates, okay? You were actually losing 5% on your purchasing power every year. Well, that's about where we are, even off of the BLS's current CPI data. It's 6.2 minus 1.6 on a 10-year Treasury note, so we're negative 4.6. Now remember, in gold, in that period, from 76 through 79, it went up to 200, back to 100, then to 900. So it can move pretty quick. It moved pretty quick just back in the summer of 2020. So I think maybe rather than just the straight up, quoted and headline inflation numbers, we should look at those real interest rates, because that's probably a better measure of where we are, historically speaking.
And as we see precious metals spike on this news of inflation, we're seeing silver as we speak, and this is the morning of November 11th. Now, we're seeing silver just above the $25 level and gold around $18.60. What are some key levels we should be looking out to kind of see where precious metals are moving from here?
Well, tomorrow's a big day. What everybody's been waiting for and what have been really shoved down our throats all year long is a series of lower highs. On my side, I've gone and counted multiple occasions. There's like 30 massive red candles on the daily chart. If you go back to January, like $30, big red candles, and the downtrend that just keeps going, just a series of lower highs, stair stepping down. And price was below the 200-day moving average most of the time. And so you had this momentum that was negative. You had sentiment that was in the toilet. And it's pretty easy for that to just keep going. But I think a lot of folks were, and you saw this in the last 4 to 6 weeks. People going, gold's dead. You know what? If it can't go up with all this going on, it's dead. Well, we're talking about what's going up, the futures contracts. And you got to have, that's how things are priced. So you got to have more buyers and sellers of those futures contracts. And while you're in your sentiment and your trend is like this, man, there's opportunity cost. If you're not, those same traders, those hedge funds and institutions were buying other stuff, waiting for that turnaround. So the first turnaround was kind of a double bottom off of 1680 back in March, and then another double bottom off of 1720 in September and October. We began moving up. The key level that we blasted through on Wednesday was 1836. We'd gone up to that level 3 times since August and had been rejected. And so there were a lot of sell stops or buy stops above there from people that were short. When we went through 1836 yesterday morning, we went to like 1850 in a matter of minutes. And so stops were triggered. So now you got to hold above that level first and foremost, because kind of like if people watch silver, they'll recall a day back at the end of September where everybody had been watching 22 as a floor for months. And there was one day in September where it broke down through 22, ran a bunch of sell stops and went to 2150, and then immediately reversed the next day. It was kind of like a one-day false breakdown. Well, what you don't want by the close tomorrow is a big, huge, sharp waterfall reversal that takes us back down through 1836, because, it'd be like, well, okay, at least we're still here, but that'd be a reversal the other way. So first and foremost, that's the first big thing. We've made a new higher high versus 1836. We're getting some momentum turning. We're also above the 200-day moving average. We're pretty well above that now. The 50-day is starting to turn up to where soon it's going to bullishly cross the 200-day. That's another positive technical signal. But I'll give you one more level to watch if we can hold on to it over the next, as we record this, about 28 hours. Anybody can pull up a chart of gold. And if you think that this trend has been prevalent really all year long, go back to the highs that were made on about January the 6th, up around 1920. Start there and draw a line through the highs near 1920. We were 1960 down to 1920. I'm sorry. Those 1920 highs were in about the end of May. and then extend that line all the way to the current moment. It's in the upper 1850s. Let's call it 1860. So you want to talk about a breakout. There's the next, that's what I'll be watching closely into the Friday close. Can we close above 1860 on a daily and weekly basis? And there's another breakout. And again, what I'm talking about here is turning the battleship USS Sentiment, and the whole carrier group USS Momentum. It doesn't happen quickly, but as it happens, then you start to generate some momentum back the other way. And that's what we're trying to do here.
And why is it important to have a weekly close above those levels?
Well, those charts, the weekly charts, are more important in terms of intermediate trend than just daily. I mean, daily, if you're like some aggressive trader, which I'm not, then you're watching you're watching the intraday charts, Elijah, you're looking for swings and pivots and all this kind of jazz. But the weekly chart to me is always more important. And you look at the monthly chart and even quarterly charts, for long-term, more secular trends. The weekly chart is more indicative than anything else. That's why a lot of times you see a lot of action on Fridays, where maybe price has broken out, looking real good like 3 weeks ago. And then all of a sudden Powell comes out, says something about taper, and boom, the bottom drops out. And it didn't look so good anymore. So tomorrow's a real important day. We've got some data, the JOLTS job data, which is a big Fed job labor market indicator where they look at job openings. University of Michigan consumer sentiment numbers, which will have inflation expectations in it, the actual Fed's 5-year inflation expectations, all of that at 10 o'clock Eastern on Friday. And then one last thing we're going to have to watch for. You never know when one of these Fed goons is going to come out of their crypt and say something. Well, one guy that I really dislike more than any of them is the guy that now runs the New York Fed. His name is John Williams. Great composer, did the Star Wars stuff, But his day job, he runs the New York Fed, and he's got an appearance at some, online conference at about noon tomorrow. And if he said, the risk to all of this is if he comes out and says, yeah, I think we should start hiking rates as soon as March. So we got to be wary of that kind of thing. But nobody at the Fed has indicated that at all. Even yesterday, Mary Daly, who's the goon that runs San Francisco Fed, after the CPI said, we haven't seen enough to even think about changing our ideas for rate hikes. But that's not what the bond market's saying. And so but no bond market trading on Thursday because it's Veterans Day. So you get all these things happening again tomorrow. We're just it's nice. We're moving up. We're $80 up in the last 5 days in gold. And as you said, silver's north of 25, but we got to see where the weekly close is before we can start drawing some conclusions.
I remember last time we had you on, when we talked about the Fed, you said, even if the Fed tapers, there's no going back to normal. And we've seen the Fed announce that they're going to taper. But I guess moving forward, what is your perspective on Fed policy? Because it seems like, we're getting this news that inflation is, higher than expected, and they are starting to taper, but it doesn't seem like they can move back to normal at all.
Right. I don't think they can remove themselves from supporting the bond market because, again, who in their right mind is buying a 10-year Treasury note at 1.6% when inflation's at, 6? I mean, you got to have inflation go way back down over the next 9 years, to eke out a positive return in terms of purchasing power. Okay, because inflation is just eating away at it every year. You're losing money, losing purchasing power. And so I've always thought that, the central banks now, once they began going down this path back in 2009, could never stop. So that's the first, thing you got to keep in mind when you think about the Fed policy. And Powell, when he announced this last week, was pretty clear. We're going to start doing this, but things change. The big COVID surge or whatever. We can turn right back around and add to it. Okay, they called that a dovish taper is what the new oxymoron was, like jumbo shrimp, that sort of thing. So anyway, that has happened. And what's been interesting is that the bond market prior to Wednesday with the CPI, the bond market in the 4 days that followed had actually rallied sharply. The yield after the FOMC when they announced this taper was 1.61%. By Tuesday's close, 4 days later, 4 trading days later, it was 143, Elijah. I mean, that's more than a 10% move. Well, now that doesn't make any sense, right? Because you're like, well, wait a second. The Fed's stepping away. Inflation is picking up. Why is the bond market rallying? Why are rates falling? And I guess let me share this with you, Elijah, and all your listeners, because I don't think a lot of people have connected these dots as to why this might be happening. Because again, gold started breaking out last Thursday, the 4th as well. Let me take you back to Tuesday the 2nd. All right. Biden is over there in Scotland at that global warming conference. The conference ends and Biden has a press conference, where he calls on people that he already knows the questions. But anyway, somebody, I don't know who it was a Wall Street Journal guy or somebody, said, hey, Joe, what's the deal here? You're supposed to renominate or nominate someone to head the Fed because Powell's term runs out in February, and no president has ever waited this long to renominate who's already in there. So what's going on here? And paraphrasing, obviously. And Biden said he shuffled his papers and scruffed and looked around and basically said, I'm still thinking about it. I'll get back to you. Powell, maybe. The guy set it up on a tee for him to say, yeah, Jerome Powell's my guy. And he didn't do it. Okay, so Biden then flies back he even mentioned his press conference. He was going to be landing back in Washington at 1 o'clock in the morning, Wednesday. Look, Elijah, you and I flying back from Europe would probably need to take a day, right? I mean, he's a 78-year-old guy. I'm sure he probably slept most of Wednesday. So Thursday's his first day back in the White House. And headlines hit that at the White House are both Powell and Lael Brainard, Fed governor, who is a big-time favorite of the progressive wing of the Democrats, the AOC, Elizabeth Warren types. And Biden, and Pelosi been kind of stiff-arming them. They, the progressive people want like $4 or $5 trillion worth of infrastructure and climate stuff and whatever. And they've been trying to, Biden's been kind of stiff-arming them a little bit and trying not to go down that road, and try to keep them in. Well, anyway, all right. Who do you think those folks? One, they need the cash. They don't need Powell shutting off the spigot. They're going to need to turn it up if they're going to, do $5 trillion in new spending. Who do you think Biden wants then as head of the Fed? And who do you think appeases those progressives? Is it the old white guy that Trump nominated? Or is it, the middle-aged gal? Okay, now we got a diversity hire on our hands. Not only that, because of all their insider trading, Kaplan, Rosengren, Quarles, even Clarita and Powell are all getting implicated, for being, God, they threw Martha Stewart in jail for, trading a stock, for God's sake. And then here you got Kaplan trading S&P futures. So anyway, Biden now has a chance to totally remake the Fed. With 3 or 4 new governors and a new head for the next 4 years? Man, I think he's going to take it. It has since come out that he's going to announce something before Thanksgiving. It has since come out back on Monday that Brainard was there for an interview. That's how Bloomberg called it. Man, I connect these dots. Huge rally in treasuries that began last Thursday after Brainard showed up at the White House. Those are supposed to be the smartest traders on the planet. Gold has rallied $82. I think the word is getting out that Powell ain't coming back. Brainard is going to be your new Fed chair. And holy smokes. She is full modern monetary theory, maybe print a couple of those $1 trillion coins. They put her in there. Things are going to get really, really, really interesting for gold pretty quick.
So it seems like if Powell is on the way out, this idea of a taper, will that even happen?
Right. That's all part of it. And again, why would the bond market be rallying? The Fed is tapering. They announced that last Wednesday. The very next day, the same day Brainard shows up at the White House, the bond market rallied like 8 basis points. Rallied more on Friday, another 7. Gave back 4 on Monday, and then rallied another 7 or 8 on Tuesday for a total of 18. Went from 161 to 143. Why? Because, do you think bond traders are thinking, hey, wait a second, we're going to have that Fed put again. We're going to have the Fed as a buyer of last resort. It's perfectly safe to buy these Treasury notes. at such a low yield because the Fed's not going to let them go higher. And again, there is history of the Fed using yield curve control to keep rates, long rates down so that you can have inflation run hotter than interest rates, have negative real yields and inflate away your debt, grow your way out of the debt, pay off yesterday's debt with cheaper dollars of tomorrow. The Fed did this after World War II. I just saw a new report out of Chicago Fed that was written last month, studying the impact of, and looking at the history of how they've done this before. And that's where all this is headed. And we get in now, this is not a transitory set of negative real rates for just a couple of months. We start talking about a couple of years of negative real rates like the 1970s. That disconnect between real rates and gold isn't going to last. I mean, that's a market inefficiency that ain't going to last. And I think we're starting to see that catch-up phase now.
Do you have any estimate on when Biden might announce a new Fed chair?
He said, he was quoted, I think it was the Politico, that Monday night put a thing out, sources within the Biden administration say he's going to have something before Thanksgiving. So that's, here in the U.S., that's 2 weeks from today. So we'll see. I mean, there's a lot of other things going on, right? Even tomorrow, like I said, even tomorrow is going to be crazy. And then as we get later in the month, 2 weeks from tomorrow, the options on the December gold and silver go off the board. And then the December contract goes off the board the next week. That's typically a very volatile period for the precious metals. There's a lot going on. But if Brainard gets installed as head of the Fed, I mean, it's not like gold's going to explode $500 the next day, okay? But I would equate it to, the 5 months that played out after QE Infinity was announced in March of 2020. Gold was, 1480 or something like that at the close of Friday, March 20th. The Fed comes out with the alphabet soup of facilities and QE to infinity and cuts rates to zero and all that stuff the morning of March 23rd, 2020, before the COMEX open and all that kind of stuff. And we immediately went up to about 1680, 1780, traded sideways for 100 days, and then went to 2080. So what's that? $600 on 1500, that's 40% over 5 months? Okay. I mean, I think playing the long game, what's 40% from 1800? That's $700, 2500. I mean, that seems outrageous, right? Especially after the year we've had, but it certainly isn't unprecedented. I just laid out for you the last time it happened. So that's the kind of thing that's possible if I'm, connecting the dots and seeing the picture clearly.
Well, it'll definitely be interesting to track this and see probably the next time we talk if Biden's made that nomination. Well, Craig, I really appreciate you coming back on the show today. Any last thoughts you'd like to leave with our viewers, and where can our viewers find you online?
Yeah, two things. This is not just bullish for, if Brainard gets in there and they start just destroying the dollar, this whole $1 trillion coin thing, if they go down that route, that's just the ripples that'll put through the foreign currency markets in terms of lack of confidence in the dollar. It's not just gold and silver that are going to go up, I guess is what I'm saying. I mean, the stocks are going to go up. I mean, anything not nailed down is probably going to go up over in the years to come, because they're just creating all this cash and it's got to go somewhere, and just like how the stock market's been going up steadily all year long, uninterrupted, really. That'll probably continue. So this is important for everybody, not just, people, that are gold bugs like myself. Most of us have investments across the spectrum. They're probably all going to do really well if this all plays out this way. So that's the first thing. And then the other thing is, I don't know, I just think this is an important time where we are. And so I did an interview Tuesday with the Wall Street Silver guys. And at the end of it, I thought, well, this is a good time to have a coupon code for my site. So, if you've never been a part of the site, you've never been a part of TF Metals Report, actually, we're celebrating our 11th anniversary today. It was 11 years ago today I started it, Elijah, here on 11/11/10. We've been at it for 11 years, so we must be doing something right, because people belong there. If you ever wanted to give it a try, it's $15 a month. You go to the website, click subscribe. If you select a monthly subscription for $15, when you go to checkout, the code I gave them, the coupon code of just WSS for Wall Street Server, and it works for anybody on your site too. Elijah, just WSS. You type in that as a coupon code. Your first month will be $7.50 instead of $15, a whopping 25 cents a day. To find out if we know what we're doing, to find out what the community's like, and for the situation I just laid out about the month ahead, it might be a good time to spend that 25 cents a day. So anyway, TF Metals Report, great online community, and we stay on top of things pretty well. So please check us out. Use that coupon code of WSS to save yourself half off your first month.
Fantastic. Well, that seems like a great opportunity. We'll put that code on the screen here for everyone. If you want to go check out tfmetalsreport.com, WSS is the promo code. Craig, thank you so much for your time. And once again, God bless.
Hey, thank you, Elijah. God bless you as well. Keep fighting the fight, man. We need you out there. It's a crazy time to be alive, brother.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded. For physical delivery, vault storage, or precious metals IRAs, excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.